Agree on that. Alphabet and Meta upgraded to buy from neutral at Citi. Amazon added to the focus list at Citi. Amazon gets its price target cut by $100 at Cowen. You've got other Alphabet, and you've got Apple call as well. Liz Young, the state of mega cap tech today, given where rates currently sit, is what?
The state of mega cap tech today, to me, is that if you're an investor, first of all, tech is a classic place to invest, regardless of rates. Tech is the future of the American economy. Mega cap tech in particular acts different than the rest of the sector. And if you want to build defensive positions in your portfolio, you're looking at mega cap tech. If you already hold them, I would keep holding them, especially if you're in the camp that we are getting to the late cycle and that we're headed for something even bumpier in the next 12 months. You definitely want to have a position there.
Man, Kerry's dropping them like it's hot today. Facebook's been a mistake, you said. I wish we had sold it.
No.
Now, you got to save your best material for the TV, not for the producer conversations.
No, I said anyone who owned Facebook a few months ago would prefer to have sold it rather than watch it drop. So that's just a truism. Nobody likes to lose their money or clients' money in a stock. At this point, Facebook is 14 times next year's earnings, and there's a lot about the Apple changes, the IDFA changes that impact the stock. Can they manage through that? I think that's true. Is the stock attractively priced? It is. There are value players who are starting to buy Facebook, but it's still something that is in transition. Google, it's a mega advertiser. It's the biggest advertiser in the world. And if we're in a recession, I think that affects the stock. We've seen it. It's underperformed this year. It had a great year last year, as did Microsoft and Apple. Those two companies, I think, were a little bit frothy, Apple and Microsoft, and it makes sense to me that they haven't been at the same level this year, but they've been, reasonably good for tech, and we still own them. Google is a name that we're quite overweight and would continue to be. Amazon has had a really tough couple of years. And at this point, I think there are many people seeing the attractiveness to Amazon. Its long-term potential, that moat is not going away for Amazon. And on the cloud side, I think that you're still talking about the leader there. So we would like that. We like that stock at this price.
Okay, Joe, you bought Amazon on April 1st. About $200 higher than where we are now. Do you make a miscalculation there on where you thought this, if not the other FAANGs, were going to go?
No, I don't think so. I mean, it's 6% lower, so that doesn't look like a very well-timed entry. But I had within the portfolio the need to have more growth at a reasonable price, and I communicated that at the time. That's where the portfolio was kind of missing some parts of its strategy. So I think Amazon for the long term fits well. It's not something I'm going to be trading out of, as well as holding Alphabet, Microsoft, and Apple. These conglomerates, as Liz rightly pointed out, their value in a portfolio just from the capital allocation distribution can't be really challenged.
Okay. Tesla shares are lower ahead of earnings tonight. One Wall Street firm reiterating its buy rating on the stock.